Hello friends. Analysis and trading. What are those? Analysis and trading are two different skill sets. We all agree. Analysis is all about mastery of observation and trading is all about the mastery of one's own self. When it comes to trading, there is no right way or wrong way. It's always your way. In trading, to start with, the best advice is to ask a simple question. This is as per the literature. Do I observe wave pattern? In our past video, we saw different wave patterns. What are those? Impulse wave, diagonal wave, zigzag, flat, and triangle. These are the significant wave patterns we should be aware of. Even a simpler question to ask ourselves is, do I see a motive wave or I see a corrective wave? What are we going to discuss in this chapter? We are going to discuss all about anatomy of Elliott Wave Trading. In last video, we saw all about the various rules relating to Elliott Wave. In this video, we are going to see how to apply those rules in our trading. So why are we waiting? Without much delay, come on, let's sit back, focus, and continue. How does the wave principle improve trading? There are three categories of technical studies. Trend following indicators. Moving averages, MACD, directional movement indicator comes under this category. Number two, we have oscillators. Stochastic, rate of change, commodity channel index, all those comes under this category. Number three, we have sentiment indicators. Put call ratio, commitment of traders report, all this comes under this category. Most technical studies simply don't reveal pertinent information such as the maturity of the trend or a definable price target. Is this a new trend or old trend? But wave principle does. 5 ways the wave principle improves trading. Number 1. The wave principle identifies the trend, identifies the dominant trend. We have motive waves and corrective waves. Motive waves, what it does, it helps us to identify the dominant trend. 5 ways advance means overall trend as up. 5 wave decline means larger trend is down. Based on that, trader can take his trading decision. Number 2, it identifies counter trend price moves within the larger trend. As we seen earlier, wave principle will help us to identify motive waves and corrective waves. Counter trend means corrective waves. The 3-wave pattern is a corrective response to the preceding impulse wave or motive wave. Being aware of zigzags, flats, and triangles enables you to buy pullbacks in an uptrend, and to sell bounces in a downtrend. Sell bounces in a downtrend. Number 3, it determines the maturity of the trend. Wave patterns form larger and smaller versions of themselves. Price activity is fractal, meaning when there is higher degree of wave pattern, there is lower degree within the higher degree. You can see 1, 2, 3, 4, 5. Within that wave formation, again you can see 1, 2, 3, 4, 5. For example, prices are advancing in wave 5 of a 5-wave advance, and wave 5 has already completed some 2-3 waves. A trader knows that this may not be the best time at long positions. Instead, it may be time to take profits or at least to raise protective stops. Fourth point says it provides high confidence price targets. For this, Elliott Wave uses Fibonacci sequence. Fibonacci sequence was the mathematical basis for the wave principle. For example, all 3 motive waves tend to be related by Fibonacci mathematics, whether by equality 1.618 or 2.618, whose inverse are 0.618 and 0.382 respectively. Also, corrections often retrace a Fibonacci percentage of the preceding wave. Even the corrective waves also Fibonacci percentage. I'll tag Fibonacci video right here. You can check it somewhere in the top of this video. Please follow through the video. You will understand this Fibonacci concept. These Fibonacci derived regions also allow traders to set profit-taking objectives and identify areas where the next turn in price will likely occur. Knowing when you are wrong on a trade is as important as knowing when you are right. Again, for your reference, I'll tag the Fibonacci video right on the top suggestion section. Please make use of it and continue with this video after that. Next point, it provides specific points of invalidation. The level at which an interpretation is no longer viable is called points of invalidation. To what point does a trade fail? Many traders use money management rules to determine the answer because technical studies simply don't offer the answer. Elliott Wave does. What is rule 1 says? Wave 2 can never retrace more than 100% of wave 1. Wave 2 should not go beyond wave 1. Wave 4 can never end in the price territory of wave 1. This is wave 1's price territory, and wave 4 cannot enter the price territory of wave 1. What happens if it enters? It invalidates. It's not a right wave. Rule 3, out of the 3 impulse waves, wave 3 can never be shortest. This is wave 3. Wave 3 can never be shortest. It need not to be longest, but it will never be the shortest. We already discussed this in the previous videos. How can traders use this information? If a technical study warns of an upturn in price and the wave pattern in a second wave pullback, the trader knows specifically at what point the trade will fail. Move beyond the origin of wave 1. Technical study says there is an upturn in price. But if this wave 2 goes beyond this wave 1, then we cannot expect the price to go up. The price will continue downwards because it invalidates, right? So this is how wave pattern provides specific point of invalidation, which will be of valuable information. 4 best waves to trade are, I'll let you guess. Let me answer. 3, 5, A and C. Why? Because it's in the dominant trend. And if we want to trade 3, 5, A and C, we need to buy during pullbacks. For this motive wave, where do we have the pullbacks? Number 2, wave 2, wave 4. This is high confidence trading setup. For motive waves, we'll trade during pullback. Hence, to exploit wave 3 and wave 5, will enter in wave 2 and wave 4. Similarly, corrective waves, the high confidence trades for us are wave A and wave C. So to exploit and make good profit in wave A and wave C, we need to sell in the bounces. Where is the bounce? During B. Or we can sell during 5 as well to profit during wave A. Just few smart investor tips. Let the market commit to you before you commit to the market. Just as it is unwise to pull out in front of an oncoming car based on its turn signal alone, it is wise to wait for confirmation. Waiting for confirming price action allows traders to use an evidence-based approach and focus their attention on high confidence trade setups. The psychology of the investor is the key to becoming a consistently successful trader. The psychology part we'll discuss later in the video or in the next video. Guidelines for trading specific Elliott Wave patterns. We know different Elliott Wave patterns. What are the specific guidelines for specific patterns? In case of impulse wave, when the wave 5 is forming and then when it continues as a corrective wave, we can enter into a position when the prices crosses this wave 4 of the second degree wave. This is wave 1, 2, 3, 4, 5 and this is first degree. In the second degree at the end of wave 4, we can place an entry and get into a position. And when we enter here, the protective stop right at the peak of wave 5. Similarly, in case of ending diagonal, we can enter in the first degree wave at the end of extreme end of wave 4, we can place an entry and protective stop at 5, end of wave 5. If we think the protective stop is too further away and risk reward is not promising, then if you are aggressive trader, you can extend this line 2 and 4, and when the price does not follow the downward move, breaks above this diagonal line, that can also be considered as a protective stop in case of aggressive trading. In case of zigzags, again we have wave A, B and C. When the price crosses the extreme of wave 4, the second degree wave, then we can place an entry. The protective stop will be the extreme end of wave C. For flats also similar to that. When the price crosses the wave 4 extreme end, we can place an entry. Protective stop can be at the extreme end of wave C. In case of triangles, the entry can be at the extreme end of wave D and the protective stop will be at the end of wave E. Here, as per literature, though the distance between entry and stop is further away, it's not advisable to have an aggressive protective stop. While making these kind of trading, Elliott Wave trading or any kind of trading, psychology plays a key role for a consistent, successful trader. Hope we all agree with that. What is psychology of trading? How psychology involved in trading, and what is risk management in trading? In the next video, I'm going to cover that. Thank you for sticking till end of this video. Please consider subscribing to my channel. See you in the next video. Bye bye.